This isn't your average credit building video. I'm about to show you how to build strong credit history, boost your score, and get instant line increases, all without spending $1 of your own money. Let's break down the pledge loan hack that the banks don't talk about. The setup. If you're just starting your credit journey or rebuilding after a setback, listen up. Most people go for secured cards and think that's the only way to build credit. But secured cards trap your money. You give the bank $300 or $500, they hold it, and you wait months just to see a few points rise. But what if I told you there's a way to use your existing credit to create new credit lines that report like real loans while keeping your cash in rotation? The pledge loan hack. Here's how it works. A pledge loan is when you take money from your savings account or share account and use it as collateral for a small loan. For example, you put $1,000 in your savings account, and the bank gives you a $1,000 loan against it. You don't actually spend that money. It just reports as a new installment loan on your credit report, boosting your mix and your score. But here's where it gets powerful. If you have a credit card, you can liquidate the card using a platform like Plastic, MoneyGram, or PayPal, transfer those funds into your bank account, and use that to fund the pledge loan. That means zero out of pocket. You're using credit to build credit. The three birds with one stone concept. Let's break it down. 1. You're adding a new loan that builds installment history. That's the first win too. You're not spending your own money, you're using credit to fund it. That's the second win. 3. And once the loan reports and you pay it off early, you'll often get a credit line increase on your credit card. That's the third win. All three combined mean faster score growth, better lending power, and access to higher credit limits faster than anyone relying on secured cards. Best banks to use. Some of the best places that offer pledge or share loans are Navy Federal, Digital Federal Credit Union, DCU, PenFed, and Alliant Credit Union. Each one reports these loans to all three credit bureaus, and that's key. Always confirm they report to Experian, Equifax, and TransUnion before you apply the pro move. If you have multiple credit cards, repeat this process with different banks. Use $500 from one card to open a pledge loan. Pay it down 90%. Let it report. Then, do it again. With another within 3 to 4 months. You'll have multiple primary accounts reporting no third-party trade lines, no authorized users, just real data that lenders love. So if you're serious about building credit fast and want real results, not gimmicks, start using this method today. And make sure to subscribe, because in the next video, I'm showing you how to flip those new lines of credit into actual funding power, turning $1,000 into $10,000 approvals in under 30 days. This is Wealth Hacks 360, where we teach the real game.